Keep your seatbelts on because the truth is even bigger than the story you've been told for years. Ripple is not trying to work with banks. Everyone in the cryptocurrency world thought for a long time that Ripple was the one trying to get into the club of global banks. But a whole new theory is coming together. That idea is turned on its head. I'm going to explain in detail what that means, why it changes everything for XRP, and how this change is directly linked to the huge amounts of money that are flooding into the XRP right now. Before we go any further, please hit the like button and follow if you like these in-depth XRP videos that stand out from the rest. You have no idea how much it helps, and it keeps movies like this coming. But now let's talk about why today's news shocks everyone, even those who have been bullish on XRP for 10 years. Because for years, everyone thought that once the XRP ETF came out, it would always be compared to Solana, maybe Cardano, or some other middle-tier chain. But Bitcoin and Ethereum, you couldn't beat those. They were the kings of ETF flows. Now, on December 2nd, which is today, the numbers tell a very different story. It's not just that XRP is doing well, it's getting more net deposits than Bitcoin, Ethereum, and Solana. You did hear that right. XRP is ahead of the rest. Ethereum, on the other hand, isn't just doing badly. Net withdrawals show that it is actively losing money. On top of that, this fits right in with what I've been saying for months. A huge change in institutions is happening in the background, and it's not caused by hype. It's focused on a theory. Institutions aren't interested in shiny stories or empty claims anymore. It's something very simple that they care about, real use cases that can be defended. And the Ethereum thesis is breaking apart. It was based on the idea that everything would be built on Ethereum forever, and that its ecosystem would become the world's largest app store for all financial products. Ethereum is a fun place to play. It's a wonderful place to explore. As soon as a project needs to grow, scale, or have its own rules, output, or compliance, they leave. They make their own link. They leave. Institutions are taking notice. They don't want to put a lot of money into an economy where big players move up from the base layer as soon as they do well. It's the same as putting up your skyscraper on someone else's land and following their building rules all the time. Long term, it doesn't make sense. This is where XRP's design philosophy really shines. For the simple reason that the XRP system was never made with the idea that everything had to be on it. Interoperability is what makes it so great. The apps don't need to be hosted by XRP. It does not need each and every experiment, procedure, or smart contract. It only needs to be the settlement asset that doesn't cause any problems and can move and settle value across any network. That design choice, which was made more than 10 years ago, is now paying off in real time as big investors look for assets that can be used in the real world and used for settlement in the real world. It's because these buyers are getting into the crypto market now, not in 2017 or 2021, and they're not interested in meme coins, Ponzi-nomics, or speculation that looks like usefulness. They work in areas like funding AI, investing in tech infrastructure, coming up with new ways to improve supply chains, robots, and cybersecurity. And you don't invest in those fields just because a group is loud. You put money into the tech because it answers a real need in a big market. XRP works great with that system. And this is why institutions are so interested in XRP's use cases like cross-border payments and settlement. They're clear, they've been tested, they can be measured, and they've already been used. They're not promises, they are goods. In the crypto market as a whole, most utility coins are based on hopes, dreams, and plans rather than real-world use. That being said, utility isn't the only thing that matters. The XRP chart is also giving us one of the clearest signs we've seen in months. If you look a little further, you can see that XRP went down for months in a steady, controlled way. The market as a whole was weak, but nothing too scary. But now, XRP is trying to go against the whole trend for the first time in a long time. It jumped sharply off of its local bottom and is now climbing straight up into the turnaround zone. Now, for the important part, it will be the end of the downtrend and the start of an upswing if XRP can break through the 230 level and hold it. At that point, momentum changes from being neutral to being positive, and XRP starts to look for higher support areas again, especially around $2 and above. With more money coming into ETFs, trend reversals happening at the same time become very interesting. This new thesis changes Ripple's approach in every way. The cryptocurrency community thought for 10 years that Ripple was struggling to get banks to use its technology to connect RippleNet to old systems and to persuade institutions that move slowly to update their payment systems. From this new point of view, though, Ripple is doing something much bigger. Banks are quietly becoming Ripple hubs, and they don't even know it. Stern Rue wrote something that laid out this idea. His point is easy to understand. It's not like Ripple is trying to join the banking system. It is changing the way banks work so that they can work with Ripple. Ripple is making banks connect to it instead of the other way around. This change in point of view is important because it fits what we've seen in real life. Ripple is no longer seen as a fintech company by institutions, governments, and financial officials. Instead, it is seen as infrastructure. Think about what's different. A seller sells something. Everything else needs to be able to run on top of infrastructure. One huge benefit has always been with banks, the power to manage cash. They were always able to limit the paths that crypto could take because they were in charge of deposits, storage, settlement, and compliance. But stablecoins made that impossible. But stablecoins have their own problem. It's hard to keep track of all the rules, especially when a stablecoin is a big group of assets on one balance sheet. Systemic risk, audit issues, and compliance nightmares are all caused by that. This delay can be fixed in a way that most crypto experts never saw coming. Stern Rue calls Ripple's structure a dual-rail settlement structure. In one way, fiat stays right where officials want it to be, on the balance sheet of the bank. On the other side, Ripple's settlement layer moves stablecoins, tokenized fiat, RLUSD, or any other currency you want to move. These two rails move apart, but come together when they stop. That is brilliant. Cryptocurrency won't have to be used by banks in the way that officials are afraid of. With tokenized value, they never have to deal with the real value. They don't have to keep the stable coins ever. They just use Ripple's rails as the settlement system and don't change their fiat ledgers. Compliance stays clean. Risk stays inside. But the payment system keeps getting faster, cheaper, smarter, and more adaptable. This changes everything because now banks aren't using Ripple as a cryptocurrency option. They are using Ripple as the foundation for settlements, which is improving their whole business plan. Things get even more interesting now. Many people think that Ripple will get a banking license soon. If it does, it will be the first company that can handle conversions from fiat currency to stablecoins and then to tokenized assets without the bank having to touch the crypto side of the deal. That cuts 95% of the legal friction right away. It gives banks a whole new way to work in the digital world without having to take down their old tools. Now add up everything that Ripple has done in the past year. The RLUSD is being marketed as a stablecoin that banks can trust. Around the world, ODL passageways are reopening. Ripple Prime is aimed at services for institutions. Asset management at the enterprise level is made possible by custody purchases like Mataco, G-Treasury, and Fortis. Singapore's MS makes Ripple's licensing system bigger. Bank tries things with partners on Ripple. Google Cloud pipelines are being tried for institutional ledgers that are connected to Ripple. It doesn't look like a company trying to sell banks one-time goods when you put all of these things together. It looks like a business is quietly bringing together all the different parts of digital settlements into a single, unified infrastructure layer. This isn't adding more products. It's a takeover of the building. Ripple is making payment plumbing that banks can't copy. They do not have the tech. They don't have the world infrastructure. They don't have enough blockchain native ability. Of course, they can't move as fast as Ripple already can. The question is no longer, will banks use Ripple? Also, will banks not be able to avoid using Ripple? Everything from currencies to bonds to carbon credits to real estate needs to be able to settle instantly in the new world of tokenized value. This means that the institution that provides the settlement layer becomes the basis for everything. And the truth is that banks don't have that base set up. The Ripple does. XRP is an important part of the whole system once banks start using Ripple-certified interfaces that let them settle cash, stablecoins, and tokenized assets through a single layer. Not flashy, not looking forward, not excited, but softly important. The same way that TCP and IP are important to the internet. TCP, cut IP, is not thought of by anyone. No one needs to know how packets move around the world between computers. But the whole system falls apart without it. That's the part that XRP is set up to play. The secret part that changes value across all other parts. Not the layer of rumor, no, not the joke level. Making the pipes. This thesis also explains why Ripple is focused less on announcing partnerships and more on making big moves that will set the company up for the long term. Getting licenses, having custody, managing the treasury, architecture for compliance, Tools made for institutions, settlement methods ready for banks. These aren't moves based on hype. These pieces of infrastructure are for the whole country. This change is very strong, though, because it wasn't clear for years. Everyone thought that Ripple would have a hard time getting banks to adopt new technologies. Even so, Ripple wasn't really trying to get banks to use their tools. They were making a system that solves problems that no other system can, so banks would have to use it. This is another reason why the story about Ripple versus banks was always wrong. Ripple has never been in competition with banks. Ripple was fighting with the old rails that banks had to use. Swift isn't a bank. It's a message system built in the style of the 1970s. Ripple doesn't try to beat banks. They can finally get past those old limitations because of it. The thing that scares people who know what's going on is that the settlement layer will be the most important piece of infrastructure in global finance once tokenization is common, which it will be. The person or group that runs that layer does not compete with banks. They give them power. This is the reason why the theory says Ripple is not trying to work with banks. Ripple is being used by banks. This is not advice about money. It won't look exciting when this method goes live. There won't be any fireworks. There won't be a big Ripple replaces Swift story. It will happen in the same way that all big financial changes have in the past. First quietly, then all of a sudden. The public never sees the changes in the facilities. After it has become the new norm, they don't feel the effects for a long time. And that's exactly how Ripple planned this whole launch. The new banking system is not going to be revealed. It will be put into use. One day you'll wake up and banks will settle faster. Transfers between countries will clear right away. Like letters, stablecoins will be able to move between countries. It will only take a click of a button to trade tokenized goods. It won't be called Ripple's technology either. That's what will happen now. The layer below the top that powers everything else. If the normal investor finds out what happened, it will be too late. The architecture will already be set in stone, and XRP will be deeply ingrained in the world settlement system. This is why behavior in institutions makes sense all of a sudden. Big money was hesitant for years because crypto felt unstable, unorganized, and unrelated to needs in the real world. Now, though, organizations aren't looking for stories. They want to find tracks. They want building things. They want a method that fits in with the rules and regulations they already follow. In the blockchain world, Ripple is the only company that built a system just for them. Not for store speculation or hype, but to keep things running smoothly. This is clear from all the new data that has been coming out over the last few months. It's not a coincidence that ETF flows are moving toward XRP. They're not just a coincidence. They are smart money moving from tech that is worth betting on to tech that is useful. Take a look at Ethereum. Massive withdrawals and falling trust in institutions. Things like that don't just happen. Institutions are starting to understand that Ethereum is the key to everything. The story doesn't work when it comes to real-world cost structures, regulatory tension, and growth. They know that in the long run, business platforms will build their own chains instead of relying on a public execution layer that they can't manage. XRP, on the other hand, does very well because it was never meant to be the app shop for crypto. It was made to be the fabric for connectivity. The payment conductor makes it easy for value to move between banks, networks, chains, and tokenized assets. The institutions finally get it. They see a record that was made to be useful, not to be used for guesswork. Instead of a vague story, they see a token with a clear business purpose. And they see a system that can handle trillions of transactions per second without breaking down in heavy traffic. Add to that the fact that the macroclimate is quickly becoming less friendly to old financial plumbing. Banks are being pushed to become more modern. Tokenization is being pushed by central banks. Real-time payments are being pushed for by governments. Companies are getting ready to tokenize large parts of their balance sheets. Things are really bad right now, and Ripple put itself right where all of these forces meet. For the same reason, Ripple is taking actions that look dull at first glance, but are really very important for the company. Getting a license in Singapore, Dubai, Ireland, or the US isn't a big deal. They must be in place before settlement tracks can be used on a large scale. It's not a hype play to buy custody. They are necessary for tokenized value to work. A tool for managing the treasury is not just marketing fluff. They are what hold corporate settlement processes together. All of this together makes a picture. Ripple isn't trying to get attention. The digital backbone for the next 100 years of banking is being built. From that point of view, Ripple isn't connecting with banks. The thesis is clear. The banks are becoming part of Ripple. They are being led one step at a time toward a design that will solve their biggest problems with technology, regulations, and structures. And this tube can't be opened again once it's closed. When a faster, cheaper, and cleaner choice is available, no one goes back to systems that are slower, cost more, and don't follow the rules. The internet went through the same thing. People who were early adopters jumped in because they saw a chance. People who were late to the party jumped in because they had no other choice. The old world fell apart without anyone noticing once the new lines were put in place. That's what's going on in money right now. And XRP is right in the middle of it all as the payment layer. Most people still think this is about partnerships, news releases, or whether one bank says in public that they're using RippleNet, which is funny. They don't know that the story has gone much further than that. This is about design at the system level. Under the surface, trains are being standardized, but most people are only interested in price charts and memes. Individuals who grasp this early on and know what settlement infrastructure really means will be in a good place before the shift becomes clear. This is the reason I keep coming back to the same idea. Stories don't matter to institutions. They care about how things work. They put their money into usefulness, not hopes. They give out based on need, not on hype. At this point, XRP is the only big asset that has a clear, proven, scalable use case that fits right in with the next generation of financial infrastructure. But this is the part that not many people talk about. When a system turns into pipes, guesswork stops being a part of its value. It comes from what will happen. You don't need to talk up plumbing. It's not in need of advertising because so many other systems depend on it, it becomes important. That's the path XRP is taking. It won't feel like a rocket. It will feel like you are slowly but surely being sucked into the global settlement layer. People will no longer think of XRP as a cryptocurrency by the time they realize it. It will be seen as an important part of the world value grid as a whole. A bridge asset for systems that use tokens, a way for banks to settle their debts, a layer of compatibility for global liquidity. That is not a story. That has to do with the economy. Also, business roles don't go away. They add up. All of that being said, if Ripple is really changing the whole banking system, then what we're seeing now isn't just the start of a trend. It's the start of a change that will be clear in retrospect, but hard for most people to see occurring at the time. And you have to understand this if you want to be on the right side of that shift. It's important. That's why if you really want to get ahead of the next 10 years of infrastructure changes driven by XRP, you need to be able to see more in-depth study, private information, and advanced strategies that regular investors never see.